Time now to turn to our market monitor guest who says investor sentiment is improving, even with all the stock market volatility. He's Hank Smith, Chief Investment Officer at Haverford Investments. You know, Hank, it's hard to see investor sentiment improving, especially after a day like today with everything going on, not just volatility, but some of these real world events. What are clients telling you?
Well, first of all, I think clients for the first time are starting to sense a little bit of confidence both in the economy and in the markets. And this is because we're 4 years removed from the financial crisis and the recession. And these flare-ups in Europe are becoming less frequent. So a lot of the big macro headwinds seem to be less of a concern. It's not that they've gone away, it's just that they're a little bit less of a concern. So investors are demonstrating a little bit of confidence, tiptoeing into the market, and we're seeing that with fund flows.
And you're telling your clients who are tiptoeing in that they should balance their portfolios between defensive and offensive stocks and a good dose of what you call steady eddies. And let's look at some of those steady eddy stocks.
Sure.
McDonald's at the top of your list. Why do you like McDonald's? The stock was down quite a bit today on disappointing numbers.
Well, it's a classic steady eddy in that its earnings really aren't impacted by the near-term direction of the market. It's also a global play and an emerging market play, all combined into one. So it's a terrific defensive company.
And what about Johnson & Johnson? That's the other steady eddy that you talk about.
Well, look, people are still going to buy Band-Aids. They're still going to buy Tylenol. They're going to still buy many of the medical devices and drugs that they provide. And so you're going to get growth. You're getting an above average dividend yield, a better than bond dividend yield, and you're almost assured of annual increases in dividends. So you get your cake and you get to eat it too.
All right. On the other side of the equation, you have some cyclical stocks that you are recommending here. You have Union Pacific, ticker symbol UNP. Tell us about that.
Well, look, even though it's a domestic company, it's an emerging market play because of all the traffic from east to west feeding to Asia and the emerging economies. Plus, it's a play on the revival of manufacturing and industry in the United States, and that is taking place.
All right. And DuPont, which should be reporting earnings soon. You like this one, even though the stock has been in a trading range in the mid-40s. Tell us what's the attraction.
Sure. DuPont has been in a decade-long transformation from a traditional chemical company to a life sciences company focusing in agricultural biotech. So they are part of the solution of feeding the world, and that is a long-term trend that should have a lot of benefits. This is a company that's becoming much more consistent and steady than it was a decade or two ago.
And now for the final stock, Apple, which doesn't fit in either one of these categories, but you say
Right.
It's a terrific buy. Today, the stock was down again. It's now trading at $390. Why are you saying that put money into Apple now?
A year ago, there was too much euphoria. Today, there is too much pessimism. Look, Apple is reflecting an absolutely worst-case scenario with earnings that are going to be reported this Tuesday. There's a likelihood it's not going to be that bad. And if Tim Cook can lay out a plan for capital outlays to shareholders in terms of dividend increases and share buybacks and reassure investors of their products and their vision for products, I think this stock could be much higher next week.
Very interesting information. Thanks so much, Hank. Any disclosures to make? Do you own any of these stocks?
We own them all, and I own them all personally.
All right. Thank you so much. Have a great weekend. Hank Smith of Haverford
Same to
Trust.
you.